Cryptocurrency is digital money. No coins, no bills, just secure entries in a global online ledger. It isn't controlled by any government or bank. Instead, it runs on a decentralized network of computers worldwide. Transactions are verified by cryptography, making them secure and nearly impossible to fake. Every transaction is recorded on a public blockchain, open for anyone to see but protected from tampering. With crypto, you control your own assets. No middlemen, just you and your digital wallet. In short, cryptocurrency is fast, borderless, and secure, money for the digital age. The engine behind cryptocurrency, the very technology that underpins this digital revolution, is blockchain. It's a concept that might sound complex, but at its core, it's a revolutionary way of recording and verifying information. Think of it as the foundation upon which the entire cryptocurrency world is built. At its heart, a blockchain is a digital ledger, a record-keeping system that meticulously tracks transactions and data. But unlike any traditional record-keeping system like those dusty ledgers of the past or even modern centralized databases, blockchain offers something fundamentally different. Instead of relying on one central database, a single point of control that can be vulnerable to manipulation or failure, the blockchain is distributed across thousands, even millions of computers worldwide. This distribution is key to its security and resilience. Each of these computers, often called nodes, maintains a copy of the blockchain, ensuring that no single entity controls the information. Every participant in the network has an identical copy of the blockchain, constantly updated and synchronized. This widespread distribution and constant synchronization is what makes the system so transparent and resilient. Anyone can view the blockchain and verify transactions, and the system is incredibly resistant to attacks or failures. Transactions aren't recorded individually, instead they are grouped into blocks. Once a block is filled with transactions, it is cryptographically sealed, creating a unique digital fingerprint and then linked to the previous block in the chain. This process creates an unbroken chain of blocks, hence the name blockchain. If anyone tries to alter a past transaction within a block, the cryptographic seal breaks, and the discrepancy is instantly detected by the network, alerting everyone to the attempted tampering. This immutability, this inability to alter past records, is the foundation of trust within the blockchain system. Once recorded on the blockchain, transactions become a permanent part of the record, meaning they can't be changed, deleted, or erased. In traditional finance, we trust banks and other institutions to accurately keep records and act as intermediaries. But in the world of crypto, we trust the blockchain's underlying math, the cryptographic algorithms, and the consensus mechanisms that govern the network. Because of its decentralized nature, no single person, company, or organization can secretly alter the ledger or manipulate the system for their own benefit. The rules of the blockchain are not arbitrary. They are enforced by the underlying computer code and the agreement of all network participants through established consensus mechanisms. This inherent decentralization is what makes the system open to all, neutral in its operation, and resistant to censorship or undue influence. Anyone with the necessary technical knowledge and resources can join the network and participate in the validation process. No one can be unfairly excluded or denied access. Ultimately, blockchain's unique structure ensures a high degree of security and transparency for all users, fostering a more trustworthy digital environment. It's the groundbreaking technological breakthrough that allows digital money, cryptocurrencies, to exist and function without the need for a central authority like a bank or government. The result is a revolutionary system where trust isn't placed in institutions or individuals, but is instead built directly into the technology itself. In essence, blockchain is the digital backbone, the fundamental infrastructure that supports the entire crypto revolution. It's the technology that makes cryptocurrencies possible, endowing them with their unique properties and unlocking their immense potential and power. Who creates new blocks on the blockchain? That's where mining comes in. Miners use powerful computers to solve complex puzzles, a process called proof of work. The first to solve the puzzle adds the next block and earns a reward in new coins and transaction fees. This competition secures the network, making fraud nearly impossible. To alter the blockchain, a bad actor would need more computing power than the rest of the network combined. Miners broadcast new blocks, which are quickly verified by others. The system aligns miners' incentives with network security. Mining is the decentralized engine that keeps the blockchain running. It's how new coins are created and transactions are verified. To use cryptocurrency, you need a digital wallet. Wallets don't store coins. They store the keys that prove your ownership on the blockchain. Lose your keys and your crypto is gone forever. Hot wallets, software on your phone or computer, are convenient but more vulnerable to hacks. Cold wallets, hardware devices, keep your keys offline, offering top security for long-term storage. During setup, you'll get a recovery phrase, a master key to your wallet. Write it down and keep it safe. Lose it and your funds are lost for good. Your wallet is your bank. Full control, full responsibility. Choose the right wallet for your needs and always prioritize security. Managing your wallet wisely is essential to protecting your assets. Most people buy their first crypto on an exchange, a digital marketplace for trading cryptocurrencies. You fund your account with traditional money, then buy crypto at market prices. Exchanges use order books to match buyers and sellers, setting prices through supply and demand. Centralized exchanges are user-friendly but hold your funds, introducing some risk. Decentralized exchanges let you trade directly from your wallet, giving you full control. DEXs offer more security but can be less intuitive for beginners. Many start with a centralized exchange, then move assets to a personal wallet for safety. Always understand the risks and choose platforms that fit your needs. Exchanges are your gateway to the crypto world. Use them wisely. Let's look at Bitcoin and Ethereum, the giants of crypto. Bitcoin, launched in 2009, was the first decentralized digital currency, designed as peer-to-peer electronic cash. Its fixed supply and security have made it digital gold, a store of value. Bitcoin's blockchain is simple and secure, focused on transferring value. Ethereum, launched in 2015, expanded the idea. It's a programmable blockchain for decentralized applications. Ethereum introduced smart contracts, self-executing code that automates transactions. This enabled new ecosystems like DeFi and NFTs. Bitcoin proved digital money could work. Ethereum showed blockchains could power much more. Together, they set the stage for ongoing innovation in crypto. They're the benchmarks for what's possible in this space. Crypto is exciting, a revolutionary technology with the potential to reshape finance as we know it. It offers new opportunities for investment and innovation, but it's also inherently risky, especially for beginners who are just starting to explore this digital frontier. Understanding these risks is crucial before you put any money into the market. Prices can swing wildly, exhibiting a level of volatility rarely seen in traditional markets. These fluctuations can be dramatic, sometimes 10–20% or even more in a single day. Such rapid changes can lead to significant gains, but also substantial losses. Therefore, only invest what you can comfortably afford to lose without impacting your financial stability. Security is paramount and ultimately your responsibility. If you lose your private keys or fall victim to a phishing scam, your funds are likely gone, with little to no recourse available. The crypto space is unfortunately full of phishing attempts, hacks, and outright fraudulent projects designed to steal your money. So always double-check everything, from website URLs to contract addresses before interacting with them. Regulations surrounding cryptocurrencies are changing rapidly across the globe. New laws and policies can be introduced that impact your assets overnight, potentially affecting their value or legality. Therefore, it's crucial to stay informed about the evolving regulatory landscape in your country and any other jurisdictions that might affect your holdings. The underlying technology behind cryptocurrencies is complex and can be difficult to fully grasp. This complexity means that mistakes, such as sending funds to the wrong address, can be costly and irreversible. Start small, learn as you go, gradually increasing your knowledge and investment as you become more comfortable. And always double-check all transaction details before confirming them to avoid errors. Education and caution are your best defenses against the inherent risks of the crypto market. Crypto rewards curiosity and a willingness to learn, but it severely punishes carelessness and a lack of due diligence. Take your time to thoroughly understand the technology, the projects, and the risks involved before diving in headfirst. The risks are very real, but so is the potential for innovation and financial growth. Beyond price speculation, crypto's technology could transform industries. Decentralized finance, DeFi, is making lending, insurance, and investing more accessible and efficient. NFTs are redefining digital ownership with potential far beyond art. Think real estate, stocks, even personal data. Blockchain enables new models for governance like DAOs, organizations run by code and community votes. These innovations could reshape how we own, trade, and collaborate globally. Challenges remain scalability, user experience, energy use, and regulation. But developers are working on solutions like energy-efficient proof of stake. The technology is still young, but its promise is huge. Crypto's future is about more than money. It's about a more open, fair digital world. The journey is just beginning. We've covered the basics, from what crypto is to how it works to its risks and potential. Education is essential. Start small, do your own research, and prioritize security. The opportunity is real, a financial system that's open and accessible to all. Begin with simple steps. Read, listen, set up a wallet, and experiment with small amounts. Treat it as a learning journey, not a race. The most valuable asset is your knowledge and curiosity. By building a solid foundation, you're ready to explore this new digital frontier. Welcome to the Internet of Money. Your adventure starts now.